there's this whole sort of world that is opening up of Bitcoin being layered into financial products.
Digital credit, STRC, is the most popular credit instrument of the decade.
Saylor's issuing digital credit. He's using that to buy Bitcoin.
We're not going to be selling. We're going to be buying Bitcoin.
Literally, like, the only interesting story in Bitcoin right now. It's the only possible catalyst that gets you back.
That's the revolution taking place.
Today, I interview Bitcoin historian Pete Rizzo.
Hello and welcome to the Bitcoin Magazine News Desk presented by Mara. I'm Pete Rizzo, Bitcoin historian at X.
A journalist in the space since 2013.
I've been through, I think pretty much every major Bitcoin crypto winter.
Known for his work as editor-in-chief at Coindesk, editor at Bitcoin Magazine, and editor-at-large at Kraken.
In my head, I'm looking at what Saylor's doing right now. Okay, 10,000 Bitcoin a week. Let's just do the back of the math. There's 52 weeks a year.
You can't buy $55 billion of Bitcoin without the value of Bitcoin being higher than if you didn't buy the $55 billion.
STRC is just a huge X factor.
Watch today's whole video, Price Expectations by 2029, 2030. Based on history, based on your years in crypto. As I ask Pete the tough questions, one of the biggest ways somebody could kill Bitcoin or severely hurt it is a self-inflicting wound. What is BIP 110? Core versus nuts. You do not want to miss this conversation.
Who is Satoshi Nakamoto?
Click subscribe so you never miss conversations like this. Now, highly recommend you watch today's entire video so you understand everything. And let's start. For those who don't know you, how'd you get into crypto?
Oh boy. Well, I fell in rather unexpectedly, right? I was a young, aspiring journalist, out of college, looking for anyone who would pay me to write about anything. And so I had a buddy out of Boston who was the editor of this sort of small payments publication. He was writing about digital payments. Back then it was mobile payments, right? So applications were really big. Square was kind of a big phenomenon. And so he asked me if I wanted to pitch him on anything. I didn't have any ideas, obviously, being someone who wasn't terribly interested in finance. But he pitched me on writing a story about Bitcoin. And what a story, right? I found myself talking to the most random people about, the intricacies of money and finance. And I never really thought about any of those things seriously. And I just kind of kept going from there. I started freelancing for them pretty regularly. I got a job there. I ended up freelancing externally, for other publications. That's when I fell into the Coindesk, sort of orbit. There was, a few people on a Skype channel that were trying to put together a news outlet. And, I was probably one of the first, 5 or 6 people there. And just started writing about Bitcoin and really never stopped, right? I think Bitcoin is many things, but it's always been a great story.
So when you first heard about Bitcoin, you got it immediately. What got you?
Oh, no, I had no idea anything about it. I think what got me about it was that I was simultaneously, because again, I was freelancing for this publication that was doing financial stuff. And I had no prior interest in finance or, any of the adjacent subject matter. So, they would try to explain things to me about the existing financial system, right? Because their audience was pretty sophisticated, institutional type people, right? So I was expected to know about bank intermediaries and custodians and how transactions actually take place between banks. And so I was actually just learning about that for the first time as I was learning about Bitcoin. And so, I sort of came to the conclusion really early that Bitcoin didn't seem that crazy, comparing to the two things, right? So it was almost I got to learn about the telephone or the horse as I was learning about the car. And I was and even though a lot of people were skeptical about the car, I was okay, that doesn't seem, you're doing what with a steam engine? You've got to load coal and have all these cars and then, have all these things. And then so I was able to kind of look at the two things side by side, I think, and just sort of decide that Bitcoin wasn't as crazy as the traditional system from the ground up. Whereas a lot of the people who were teaching it to me, right, they were very ingrained and this is how it is and this is how it must be. And they were actually pretty strongly negative of Bitcoin, because some of the folks who ran that publication, it was called Payments, Pymnts, briefly, kind of had a pretty mid-sized kind of payments event, and I met some early Bitcoiners there. But yeah, very interesting, right? They were staunchly Bitcoin would never work, it's going to fail, and that sentiment obviously still persists today, right?
100%. I thought it would be done by now, but the fight continues. Let me ask you this, Pete. You've You're the Bitcoin historian on X and also YouTube now. I love your
I love
account
it.
because I love the history. I got in, I was class of 2017. Um, and I just love learning the history and being so new to technology. People say that 2026, horrible vibes, horrible sentiment. Historically for Bitcoin, what do you think was one of the toughest times in Bitcoin's history?
Yeah, this is up there. It's pretty bad, I would say. I've been through yeah, I think pretty much every major Bitcoin crypto winter. I used to say that the 2015 one was really the worst, right? Because it was just like Bitcoin really had this big, tremendous, run in 2013. And I think for people who weren't there, it's hard to realize, right? This was kind of a time when stuff got big really fast, right? I think people forget that there was like an age of the internet where like Facebook had just happened, right? Like Facebook went to like 1 billion users overnight, right? Uber was, went from like an app to like it was in every city, right? So and there were a lot of books at the time, right, that like tell the stories of these startups, and they're very like guys in their dorm room one year, billion-dollar penthouses the next, right? So Bitcoin was very much in that story like back then. And so in 2013, when things like really shot off, people sort of expected that like Bitcoin would just go up forever, right? It was sort of even ingrained like in the thinking of the startups, they were all buying Bitcoin, they're all participating in the economy, and it was all just, you gave VCs a chart, the chart had a hockey stick, you got money. That was how the world worked, right? And so when 2015 comes around and Bitcoin has that crash, right, it goes from $1,200, $1,300, like all the way down to $100. It really sucked the air out of the room, right? And you really, at that point, if you were still in Bitcoin and crypto, you sort of had to wonder whether the whole thing was dead. I mean, it really became even like unpopular. I remember, so the banks kind of came in 2015 and they were starting to do maybe what they're doing with tokenization back then, but they called it blockchain, right? And so they were having their own events where they were talking about taking kind of the failed Bitcoin technology and applying it. And like you wouldn't even hear the word Bitcoin like in these forums. Like the people who stood up and like asked a question and like said the word Bitcoin and Ethereum, it was like you could tell the heat in the room like had gone up. Like I remember being with this guy representative from IBM, and like another early Bitcoin miner came up to me and he's like, I love consensus. That was our conference at the time. He's like, but it'd be great to have like a Bitcoin track. And the IBM guy was just like, astonished that this was very shocked. It was, you did like with the YouTube thumbnails, right? He was aghast, yeah, that this was like, being talked about. And so, yeah, that was pretty bad. But I think interestingly, like this 2026 bear cycle, if it is a bear cycle, right? I think it's, the consensus is that we're, approaching a winter or in some sort of cooling off period. But it feels uniquely pretty bad. I think that one of them is because I hang out with a lot of the OGs or people from that era, and their sentiment is kind of sharply negative, really for the first time. Like that's new.
Back then, or you're saying now?
Sorry?
You're saying now it's negative.
Yeah, that's pretty new. I would say like a lot of the people I knew who were like stupidly optimistic about Bitcoin, like very early on. I don't want to name names, but like people with big conferences, like investors, like people you would know on the circuit. I was at the Satoshi Roundtable, which is sort of like a private, OG retreat, right? And like the mood from the OGs was very much like, okay, what now, right? Like so we got the president, but we're down. Like we got, the banks are supposed to adopt, but that's not really happening. So it was very much like, and then the quantum, there was a lot of talk about quantum, and people had various, opinions about that. But like also a lot of the OGs had like moved on, right? They're doing AI stuff. Some of them are so rich they have multiple vineyards. They're doing longevity. They're like reverse aging, because they're just so into their own, personal health and wellness at this point. So yeah, it's just an interesting, fascinating set, right? It does really feel to me like the Trump election, and I said this at the time, to some folks, it's like that. It felt like the end of the early days. Like it's no longer early with the Trump election and Bitcoin sort of being, a policy point for the U.S., which is, again, the global leader, right? And so, yeah, I think that there's some interesting frostiness with like the old timers, particularly, and there's a lot of division in the movement, right? There are people who kind of miss the 2021 like counterculture vibe, right? Where like Bitcoin and crypto were like really cool and like edgy. And that's gone. So I think a lot of the newer people who like, you were more, you kind of came up in that era, right? Where it's like Bitcoin was something that was, it wasn't like conventionally cool, it was like alt counterculture cool. But there was like a lot of cachet and like being in the movement, right? You would go to the conferences and they were exciting, lots of people and lots of money sloshing around. And like that feels sort of, over. And I think people are trying to come to grips with that. And then there's like the institutionalization of Bitcoin, which a lot of people have negative feelings about. So there's like these three kind of, storm fronts that are like converging, right? Which is like OG negativity. I think like the 2021 era coolness, like sort of wearing off. Like, right, you can't really be cool if, the administration is pushing you, right? Like, that's not how the mechanics of cool worked, like since the 1950s or whenever jazz musicians coined the word cool, right? Right? Like that's not how that works. And then there's the sort of like institutionalization stuff, which, I think a lot of like crypto builders like don't find intuitive, and like what Michael Saylor is doing, just appeals to sort of a different demographic, right? So you have this like shilling effect where I think in the previous like bear markets, like those groups were pretty strongly optimistic, right? The old timers were still diamond hands, kind of seeing it through. Like the newcomers were, they were still had the idea that they were very, like pretty early, right? Like, the president wasn't pushing it. So like, you're pretty early. And so now I think like the people don't know if they're early. And like that's kind of the combined theme if you sort of wrap up all this. And that's making this bear market like particularly frosty, I think.
Yeah, I think for the first time ever, like people I see on Twitter comparing all the time, the bear market of FTX 2022, way worse because the second largest exchange globally collapsed. To me, though, we've always had a boogeyman to blame it on.
Yeah.
And this cycle, Bitcoin's going down just because nobody cares. They're invested in gold or oil or whatever, or Pokemon cards.
Yeah, I mean, it does help to have a villain, right? I mean, I would say even when Sam Bankman-Fried and that stuff happened, like I was just kind of, used to expecting like the cyclical nature of Bitcoin. And I just sort of at the time, like it just didn't really feel it, right? I just didn't like, I was part of like everybody who was still going to events around the world, and people still felt like pushing Bitcoin was like a good thing, and it still felt like that David Goliath dynamic, and I think like that's what's really shifted, right? And so there were a lot of people who were like appealed to Bitcoin on that basis, and I think what you're hinting at a little bit is like yeah, I think for the first time in a while, there's a sense that Bitcoin, and crypto are mainstream, and there like hasn't really been a bear market when it's been mainstream, right? You couldn't really like back in when the FTX was happening, was it mainstream? It still felt like it was on the margins, right? Just because the administration was attacking it, and it had that kind of vibe towards it. I think like that, I don't know. I think back at FTX and I just, there wasn't anything in my mind being like, okay, I was just like, in 2 years, there's going to be another bull market because of the cycles. And there was, right? Like I didn't have anything to worry about.
Pete, you're a Bitcoin historian, so you're uniquely positioned to answer this next question. Price outlook for Bitcoin in 2026. Do you believe with the OGs we're in a bear market? We're going higher? Where do we bottom?
Yeah, good question. I have a different calculus on bull and bear markets than price, and I would say one of the things that I look at is just narratives, right? And so if you look at the narratives right now, like the narratives of the last bull market are like clearly dissipating, right? So market structure kind of went from something in the beginning of the year where people were like, "It's happening, it's gonna go," like Coinbase is gonna get it done. This is January, February. Now it's like we're at war with Iran. There's all these things going on. And so like that's breaking down, right? Like the Bitcoin and DC narrative is really breaking down. You have sort of the corporate adoption, right? There was like tons of companies coming out and copycatting Saylor, and they were all doing really well. And everybody, who had a kebab shop like in somewhere around the world was stacking Bitcoin and their stock was going up. Now that's kind of going down, right? So like I kind of think like, how do we know that we're in crypto fall? Well, like the songs of the summer are a little bit old, right? So I use this analogy where it's like, when you think about the big summer song, like when I was a kid, like Fall Out Boys, Sugar, You're Going Down comes out, or, Green Day, American Idiot, whatever. It's like the big song, right? And then you go back to school and it's like, you still try to hang on to that summer feeling. So there's these big narratives now that just like, they kind of feel like, they're getting a little played out. They're starting to feel like the songs of summer. And so, yeah, it does feel like the narratives are breaking down, right? Every sort of like all the big catalysts, all the big narratives are, even I see this on X, right? I tweet like things with positive sentiment or people predicting positive, outcomes for Bitcoin, and it feels like, there's not that traction there right now, right? So there's a fatigue with all the existing narratives, whether it was, government adoption of Bitcoin, sovereign wealth adopting Bitcoin, institutions adopting Bitcoin. There's a lot of fatigue with these narratives. And so, like, I think that's the strongest case that we're in winter. Like, so for the price, though, it does feel like from a price perspective, I mean, it is objectively a mild winter. We're only down like 50%. Question is, do we go down 70, 80%? That would be, even if you end up in the high 60s, right? That's an improvement over the last cycle. I think that big X factor here, though, is like, in this whole model, there's one thing that I still think spoils this, and this is Michael Saylor's STRC. I think it's literally like the only interesting story in Bitcoin right now. It's the only possible catalyst that gets you back into something other than market structure, right? But I do feel like market structure is sort of, for the first time, it just looks really hard. Like there's so many reasons now that we're in a global conflict of which nobody is really understands the implications. It seems really easy for people to be like, yeah, like maybe we don't need to, figure out what cryptocurrencies are securities right now, right? And so for that feels to me like it's sort of, obviously I don't want this to happen, right? Or as a Bitcoiner, maybe I'm a little bit ambivalent, but like, I do think it would be good for the price, obviously, if clarity passes. But it's starting to be a question, right? So I think like right now, the only game in town is STRC because, I mean, if you've seen the last week, right? Michael Saylor has built like a truly like unprecedented product within Bitcoin history. I think Michael Saylor has a very interesting thesis like within Bitcoin history, which is like very distinct. And those two things are really converging. And this week, he's going to buy 10,000 Bitcoin, hardly diluting the shareholder base with a completely novel product that very few people outside of like even core Bitcoin. I'm curious for your thoughts on this, but my impression is that both mainstream traditional finance and crypto sort of just have a little bit of a block on Saylor right now, right? They sort of think that he's doing the same thing that he's always doing, when meanwhile he might actually be having his big moment where he really figured out something that's net new. And so, in my head, I'm looking at what Saylor's doing right now. Okay, 10,000 Bitcoin a week, let's just do the back of the math. There's 52 weeks a year. He's getting to 800,000 Bitcoin for sure. He's 900,000 Bitcoin, looks conservative. It's possible he gets to 1 million Bitcoin by the end of the year. And so, if he's buying 200,000 Bitcoin, hard to see that the price, is going to go down further. Maybe it doesn't go up for other reasons, right? But I think that STRC is just a huge X factor.
For those who we've talked about it on the channel, but for those who have never heard of it, for the common man, what is STRC?
Yeah, STRC is a very complex financial product. So Michael Saylor calls it a form of digital credit. Essentially, it's a preferred stock. So it's a type of equity that you can purchase in the institutional markets that offers you certain rights and privileges. In this case, STRC is a financial contract where you give cash to Strategy, the corporation, and then Strategy, the corporation, takes on certain obligations to you as a financial participant. So, since we're talking about the SEC and the CFTC and the nature of like crypto securities, like, STRC is a security, right? Like there you are giving Michael Saylor money. He is giving you the promise to meet a payment obligation. And that is the financial contract, right? So essentially, the way it works is, you give $100, buy $100 worth of STRC. Michael Saylor takes that and allocates it to Strategy's cash balances, which go into his kind of Bitcoin purchasing machine. And then he gives you the rights to, a certain amount of cash flow on a monthly basis under whatever the terms that were set out, during this kind of regime. And he's completely in control of kind of all those different levers, to increase or decrease demand, right? So it's a security, he's completely in control of it. If demand is high enough, right? Like you're talking about the par threshold. If it's over par, that means he can start allocating some of that money into just his Bitcoin buying, right? So it goes into sort of the Saylor buying machine. So if you see people out there on Twitter kind of watching for this par number, that's really what they're looking for, right? Is at that point, Saylor is then able to allocate that new cash flow, which is essentially excess cash flow, into buying Bitcoin. And that's what started to happen over the last week, right? Where demand is so high, volume for this product is so high because the dividends are paying so much, and there's so much demand. He now has all this excess capital to come in and invest in Bitcoin. And in his view, right, what he's doing is he's selling you. He believes Bitcoin is going to increase 30% per year. He's giving you an 11% of that, and he's taking the difference, right? So in his view, it's a financial contract where you're giving him $1 today. He's buying Bitcoin, but he's getting only a percentage of the future return. Again, of course, he's taking on a lot of risk in this financial contract, but financial contracts are all about assigning risk and responsibility and a lot of the things that for us have been critical of like sort of the crypto and token world, right? Like these things don't exist, right? If you buy fart coin, like you're not entitled, you don't even get a fart, right? Like you're not entitled to anything.
You don't? Damn.
Yeah, I don't know. I don't know. Do you get farts? I don't know.
I've never owned any. But do you think like how the digital asset treasuries marked the top of the recent last cycle? Is this, I mean, the fear is, listen, the only thing that could rain on Michael Saylor's STR parade is if Bitcoin's either going to 1 million or zero. I don't think it's going to zero. So obviously I understand this product fully, but if we have an extended bear market where he has 2 years of cash reserves, 2 years from now, Bitcoin's price is around, 2030, that could rain on Saylor's parade. I guess, do you think this could mark a top, or is this just such a new paradigm shift?
This is the whole thesis, right? This is why I say Michael Saylor, you really have to like observe the whole thesis that he's putting out like here. So yes, it is true that if he is incorrect about the compound annual growth rate, like his risk heightens, right? Of course, he's making the bet that that's not going to be the case. And again, like I think a lot of people in Bitcoin are really aligned with this because they believe the Bitcoin market will appreciate, and they believe that this financial product is sound. I was talking to James Seyfert over from Bloomberg Intelligence, and he was saying that the read in the traditional financial rooms is like, people don't believe that Michael will meet his obligations. Like if you look at the actual cash balances and sort of the makeup of strategy as a company, again, with these dividend payments, he has a lot of tools to go out and make these payments, right? So let's just say, even if for some reason he suspended the dividend and, delayed the dividends, well, then legally, you would, as a shareholder, those dividends would accrue interest, and, he could be able to go raise cash some other way. And so because it's a regulated financial product, and he is actually issuing you in some sense a liability, right? He's on the hook for paying you that. He can go out and take any sort of number of moves to satisfy that cash demand, selling assets, selling Bitcoin, right? Some of the digital asset treasury companies are. But I would say to your point, like, the digital asset treasury movement or the Bitcoin treasury movement, I do think is sort of generally misunderstood, right? Like it was, I think, especially I got to watch a lot of the crypto folks sort of, try to adapt to Michael Saylor's strategy, right? And I think that they think it's very gimmicky. When in reality, it's just empirically true. Corporations and then, especially financial companies under securities laws just to have a dramatically wider degree of things that they can do, like different markets of capital that they have access to. They can legally do different things, right? And so when we're talking about the difference between Bitcoin and crypto, like in the crypto world, some of those things just can't happen, right? Like these coins are mostly issued by nonprofit foundations that are beholden to certain laws under that structure. That's a very different type of entity than a financial institution that's regulated and, is issuing regulated financial products. Like a lot of the tokens that were issued from like 2016 and 2021, they're sort of deliberately designed not to be financial products. Right. And so like they're a part of their engineering is, to give someone who issued them the plausible deniability that what they were issuing was actually a security, which gets you back in a kind of market structure. But look, I think the whole point here is that what we're talking about is the financialization of Bitcoin, right? There's this whole universe of financial products and a whole universe of investors who are sort of gated to the existing financial system, right? They have to buy certain products from certain people with certain risk, and there's certain expectations that they have with buying those products. And I think, this is the interesting binary bet here, right? The crypto side of the space, I think, has long sort of thought that space will come to it, right? These kind of institutions will adapt to crypto. They'll adapt to kind of the KYC, or not KYC, but like, self-custody. They'll adapt to the protocol nature and the technical risk of these things, right? They believe that these institutions will come to the blockchain, and sort of Saylor is kind of making a little bit of the opposite bet, where he's basically saying, I think his thesis on some level is, financialization is an alternative to tokenization. I'll give you an example. If you're buying Ethereum with the intent to stake it, you're getting a 4%, 5% yield. I don't even know if it's that high. Do you know the current rate?
Yeah, it's like between 2 and 3.
2 and 3%. Okay.
Used to be
Michael
5.
Michael Saylor, if you put $1 into STRC, is giving you 11%. So as from a financial product perspective, since both of these are financial products, now when you're saying, oh, I'm going to stake Ethereum, and again, there's other reasons you might stake Ethereum other than the financial gain, but if you're looking at it from purely a financial investment risk reward, these two products are now competing. And so I think there's going to be a really interesting suite of products. You're seeing like stable coins backed by these different financial products that Strategy is issuing. You're seeing like different products that like kind of take up and offer like certain rewards, like for people who buy these accounts. There's a company called Roxum that's like, it has a Bitcoin denominated exchange. If you hold STRC there, they'll pay you in Bitcoin. So there's all these really interesting products you can build with financialization. And, I think this is an interesting way to look at things, because Bitcoin and like sort of the Bitcoin movement under Saylor is really making the bet that even in a world where there's tokenization and blockchains, like a lot of how big capital management it happens just isn't going to change, right? There are certain institutions that, can buy a product like STRC that just offers, steady cash flow, who would never be able to buy, to use a DATS or sorry, not a DAT, but a DEX or like a DApp or like anything like that, right? Like they just wouldn't, just because of the way the laws are currently written. And again, this is sort of, kind of where some of this gets interesting. And so I always kind of think about it as basically Saylor is trying to say through financialization, we can create a lot of the same products that the crypto world tried to create through tokenization and through technology without the technical risk, right? Because in the instance with STRC, you just have to trust the company. Whereas with the financial protocol that's offering you a certain percentage, well, you're trusting the software developers, you're trusting the nature of the protocol and the design itself. And so I think you almost want to think about it. A lot of people don't think about it this way, but when I look at what STRC is doing, what Michael Saylor is doing, it's not that much at the point that there's a stable coin that's like backed by STRC is it that different than Luna? It's like they start to look like very similar products. And I think a lot of people haven't viewed them as, different things. Because I think the crypto people in some ways, and I was guilty of this, they just kind of expected, we have all these norms in crypto, right? Like we just expect things now to look like we expect them to look. And one of the things with what Saylor's done is it's outside of that. Even myself, right? Like I kind of thought that like the next kind of person who would be really important to the Bitcoin movement would be like really technical. I'd seen like your Vitaliks and your Charles Hoskinsons and who's the guy from Polkadot, Gavin Wood, right? Like there was just a certain like type of person who like, got big in the crypto world and then like became a big influential person, right? And like Michael Saylor is like very different than that. And so I think because it sort of came outside of our expectations, a lot of people, especially in my conversations with people in the crypto world, they think what Saylor is doing is just he's a good marketer. That's what they think that he's doing. I think what he's doing is he's actually finding a way to like really offer like products that, change the nature of just the whole Bitcoin and crypto universe. I really think he's going that deep with it.
I think Saylor's a good marketer, great communicator. How he'll great, almost artistic, where he'll say like, oh, buying a piece of property in cyberspace, whatever. It makes me understand, okay, this is what this is. One question for you on I guess the Ethereum people would counter back to your point about, oh, you say Saylor is just bringing the financial products to Bitcoin. The Ethereum people would say like, well, we don't want counterparty risk. That's what the Bitcoiners were all about anyway. But then, of course, I know what the Bitcoiners would say. They'd say, we want to keep the base chain as decentralized, permissionless as possible. And obviously products will be built on top. And I guess that's really the two sides of the coin, would you say?
Well, I mean, look, there's people in Bitcoin who want to bring the crypto world over to it, right? It's folks like Starkware and Hemi, and there's a whole universe of L2s, and it'll be interesting to see, how that stuff plays out. I think my only point was that, particularly what Michael Saylor is doing, and I watched the crypto community's reactions to that. There was one like high-profile crypto executive who I know from back at CoinDesk, right? We used to be like very friendly with, and he sort of pivoted to kind of doing one of these digital asset treasury companies, even though prior in most of our conversations, he was really negative about it. Right. And I think I saw in that moment, there was kind of a capitulation, right? There was a realization that, look, I mean, there's a reason certain things are a certain way, right? The financial system that's been built up over hundreds of thousands of years, maybe it's not the most efficient thing in the world. But think about the nature of a pension. Like a teacher works for 30 years, and then the societal expectation is, we have to pay for that teacher to retire, right? And so there's a whole system of laws that seeks to reduce the risk of financial products that those particular types of organizations or institutions or capital pools can buy. And so then you have to sort of ask like, is that going to change? Like, is the pension of the future like going to be on DeFi, right? Is like the retirement savings account, like what is the best way to offer crypto exposure to those? And right, and if you look at MSTR and STRC and the products that Michael's offered, it's like those are the markets that he's getting to today, right? There are central banks that own Bitcoin exposure through MSTR and other products, right? And so he brought Bitcoin there rather than expecting sort of, the world to come, to crypto. And so again, that's the nature of the bet, right? I don't know if I have a particular side in it. I just think that what Michael's doing is going to be very big in the short term, like much bigger in the short term than the people on the crypto side realize. Even if one day you get to this hyper decentralized, we're all like skateboarding on, light up rocket skateboards, and there's AI DAOs that have financial contracts. I just think that what Saylor's doing and what the digital asset treasury movement is doing is just very underappreciated, and it's underappreciated because it's successful because it's working within the existing framework, right? And I think for a long time, most of crypto has been predicated on the idea that their most value that could be accrued was from working outside of the system. And that's the difference.
Pete, let's switch off, a slight change in topic. You're the Bitcoin historian. You know the history. What Bitcoin price over the next 12 to 18 months down would scare you?
Would scare me.
Would scare you. For example, you said, 70, we're at a 50% correction.
Oh,
70,
right. Okay.
70
right, yeah.
to 80 between there. That would be normal. Is there a price that would scare you?
Yeah, I mean, yeah, if you went below like 20,000 for sure. Yeah, that would be like, I think a lot of people's perception about Bitcoin that would radically shift at that point, right?
Because that's the bottom of the last bear cycle. If we break that, that's decade-long support we would be breaking.
Yeah, I mean, it just feels sort of like, Bitcoin coming down from 120, right? If you went down because so if you look at the 4-year cycles, right? 1,200 to 150, 20,000 to, there's a statistical sort of performance, right? And so even though we're down right now, the curve has sort of been trending up, right? It's getting less volatile, and there's a slight improvement with each down. If you were to see something that's, cataclysmic, yeah, at that point, I think you would sort of have to question, and this is sort of the meta question, right? Like Bitcoin's implied future price is predicated on its future use and demand, right? So like how people expect it to be used in the future. And so, you would have to probably believe that, there were some pretty big changes in how people thought, Bitcoin would be used in the future if it's down at $20,000. Like that means that, and look, there are scenarios, right? Like, and people have talked about them for years, right? Where like Bitcoin becomes the Napster or the MySpace, right? And it doesn't, kind of keep growing. And, if you got to 20,000, I think that, that would be the sign. That would probably be a pretty bad sign that the Bitcoin adoption story, because like the scarcity of Bitcoin, if the scarcity of Bitcoin was no longer driving its price, right? If you weren't seeing, if we let's just say if we saw a next halving and there was no price movement of Bitcoin as a result of the halving, would be very alarming, right? Because I think one of the things that a lot of people who see the future of Bitcoin, the Bitcoin economy, is based on is that the scarcity of the economy and the overall demand, and so that starts breaking down. Yeah, probably be pretty frosty for us here. Probably be less of us.
And by the way, just because just the very fact that I'm asking you these questions just means we're in a bear market. A year ago, I would have been asking you, the bullish questions.
Yeah, you just switch it around. Yeah, I got it.
Exactly. But I think I don't believe we'd go below 20 just because, I ask myself, do I think the world in 10 years is going to be more digital or less digital? Do I think we're going to have more trust in governments and centralized entities or less trust? I think it's obvious we're trending less. If we did get to 20, though, less trust in centralized entities. If we did get to 20, what would be you're saying the cause would be something is fundamentally broken, like even a debt cycle?
I would say like the worldview of most Bitcoin hodlers probably would have changed significantly. There would have been something, right? And so when people talk about like the quantum thread, right, what are they saying, right? There's some right now the base most people feel comfortable holding their funds in Bitcoin for like 100 years, right? I even get into arguments with like old Ethereum, folks, like, and it all well, there's this guy I meet at every conference. We see each other once every 2 years. We'll argue for like an hour and a half about Bitcoin and Ethereum, and he'll get me to try to say like, okay, well, but would you buy Ethereum then? And I'll try to get him to say if you buy Bitcoin then. And usually it ends with basically us coming to the question of like, okay, like, well, where would you store your money if you were going in a coma for like 100 years? And he's like, I don't know if I would keep it in ETH. And he's like, but like your security budget is going to run out, blah, blah, blah. And so it gets to this question really, right? Like of like, could you keep your money in there for the long term, right? And this is one of the core reasons that Bitcoin is monetizing, right? People expect the protocol to continue to exist in the future. And so why quantum cuts to that, right, is it potentially, maybe a little bit overblown, but some people think that it potentially undermines that, right? So I think like you would really have to start seeing some scenarios where, the vast majority of people started to believe that was plausible. And if that's the case, it might actually be plausible at that point.
Let's switch it to the bullish. Where could Bitcoin be top of next cycle if STR continues to play out, if we get a new narrative and we're back in bull? What's your top?
Well, I think the Bitcoin treasury companies really have been quietly innovating. And I think that a lot of people don't really realize that Saylor has continued to innovate, right? And so one of the things that's interesting is you think about like how sophisticated was Saylor's like market buying strategy. And his strategy is like more sophisticated today than it ever was, right? Like, so what he's doing now, like the kind of financial products that he's issuing, back in 2020, he was just taking cash that he had buying Bitcoin, right? And this is like 5 years of him like going through the depths of the plumbing of the financial system and like trying to anchor Bitcoin to different regulated financial products. STRC is a sort of huge step because it's sort of the first successful version. Like MSTR is also just, so, there was Bitcoin, right? And then MSTR sort of became a stock that was tightly correlated with Bitcoin, right? There was some relationship, some reason to buy MSTR for Bitcoin exposure, right? So now you have an equity that's linked to Bitcoin in some way. Now you have sort of derivative financial products that are linked to MSTR and to Bitcoin. And so there's this whole sort of world that is opening up of Bitcoin being layered into financial products, right? So Saylor's issuing digital credit. He's using that to buy Bitcoin. Other digital asset treasury companies are now buying his credit, which gives him the ability to buy more Bitcoin if they issue credit. And you know what I mean? And then it sort of goes back and forth. And so I think the bull case is that this kind of core idea, embedding Bitcoin in traditional financial products, really takes off. If that's the case, it's likely that the worst is over. There's probably not going to be a significant, drawdown from here. And that looks like probably more companies getting in that market. So Metaplanet, the big Japanese company, has announced that it's going to issue preferred stocks that allow it to buy Bitcoin in the same way. Strive, which is another large Bitcoin financial company that's owned by Vivek Ramaswamy, gubernatorial candidate out of Ohio. Well, let's just say that those products really start clicking and there's big institutional demand, right? I mean, just yesterday, Michael Saylor sold $300 million worth of STRC. Like a single share of STRC is $1. Like he sold a lot of STRC, right? That's in this week in total. Obviously today he didn't get over the threshold and he wasn't able to buy with it, but he bought $1 billion like of Bitcoin through selling his financial products. So one company, 1 week. More companies becomes a movement, it really catches fire. That's not it's offsetting daily mining demand, it's offsetting weekly mining demand, it's offsetting monthly mining issuance. I mean, there was I think a stat the other day, like since the end of 2024, Strategy itself has bought 2x the mine supply. And maybe that continues. I'm sure there's a lot of old whale selling, but how many more are there? How many more people have 80,000 Bitcoin under the couch? And so there's going to be an end to that selling. And if this is just the beginning of the demand, well, then, yeah, and this is the thing, right? If Bitcoin gets access to these capital pools, that doesn't necessarily mean the rest of crypto gets access to those capital pools, right? Maybe they can replicate the same financial products. I haven't really seen sort of the digital asset treasury ecosystem, like your Bitmines. Like, I don't see them talking about this. I don't know what's there, but the Bitcoin treasury companies, if this really takes off and these kind of financial products work, yeah, I mean, it's a totally different market. I mean, it could be even by the end of next year, you're back above $100,000 comfortably, and things are feeling bullish.
And you're the historian, so price expectations by 2029, 2030, based on history, based on your years in crypto.
Well, when's the next halving? Is next year is 27, right? Is that correct?
It's in 2028, isn't it? Because do we have the last one in 2024 or 25? 25.
The last halving was, oh man, this is it was in
blends.
April of 24, right? Because
yeah, exactly.
And so yeah, this one will be, yeah, we're about a year and a half away, right? Yeah, I mean, I think that obviously you would hope that Bitcoin's at new all-time highs. The real question is diminishing returns, right? It's really this we're at an interesting dynamic here, right? If you look at the chart of the S curve, right? At some point the S curve really gets flat. There's a big uptick and then there's a grind and then it goes up, right? And so the scenario I think that people really have to consider is like, and Saylor's done a good job of saying this, right? Maybe there's going to be 8 years, 10 years of Bitcoin looking like it's matured, looking like it's become a financial product. And then it starts to look like an anomaly, right? And so that's why I think this is going to be a really interesting time for hodlers. So yeah, I mean, I think by 2030, I think we could still be in that curve, right? I'd like to see a $300,000 Bitcoin. Do I think I'm going to see it? I don't know. I thought that I would see a $300,000 Bitcoin already, right? I think that the chances are more likely than ever that we're going to see $1 million Bitcoin. But the question of the time frame, it could be that we're just this is a unique period, right? The old timers are leaving, the industry's growing up, we have to find new sources of demand, and then there's a big boom later on.
You're going to hate this question because it's been talked to death, but who is Satoshi?
I thought it was you, or no?
Dude, I haven't come out one way or the other. Leave that to the audience. But who do you think?
So have you denied it formally, or what's the...
I have not, and this part will be cut out of the interview.
Who is Satoshi Nakamoto? Yeah, it's a great question. How do you want me to answer that?
Well, I want you to answer. Give me your top three of the most prominent suspects, because we've all heard the same names, but many of the audience hasn't heard any.
I don't have. This is one of those things that everybody expects me to have a good answer to, but I really don't have a great answer to because I don't really spend a lot of time like thinking about who's most plausible. Ironically, if you were to give me my top three, I would have said that there's a few people who I think there's a non-zero chance that they are or were involved, right? Peter Todd is on the list, Adam Back is on the list, non-zero chance. Right? I'm not saying that's over 20% or 30%, just a non-zero chance, right? But yeah, I mean, I think it's far more likely that Satoshi is just someone who, we didn't know, or just, somebody on the mailing list who, lurked for just a long time and just, came up with the right idea. I think it's highly unlikely that we know, but I mean, we'll see, right? I think one of the big, interesting, things right now is with LMMs, right, and AI. And is can AI bring any new information about the search for Satoshi? Because if you think about, what AI is great at, right? AI is great at taking a ton of data and cross-correlating it and finding all these interesting connections. And so the real question, I think, is that Satoshi's anonymity has lasted for almost 2 decades, which in internet time is, Herculean, right? He's avoided the gods. But the real question, I think, is like, does AI find Satoshi? Because, if you think about his internet footprint, okay, so maybe it's hidden from me and you, but is it hidden from computers? Like, is there some way, like in some files somewhere, there's some breadcrumb that some AI can connect to some other thing? And so I don't know. I think maybe the better question is, will we see AI find the identity of Satoshi? And then I guess if it does, like the question is like, how would it be? How would it reveal it? Right? I don't know. So that's that. I think that's the more likely case is that it's if Satoshi does get revealed, it might be in the next 5 or 10 years when AI is just becoming, super sentient and able to look at the stuff, right? It's evaded the best cryptographers and the best computer scientists for this long. But AI is new, right?
So non-zero chance, it's Peter Todd. Non-zero chance, it's Adam Back. I need the top three. Non-zero chance,
Non-zero
one
chance.
other person.
Trying to think, like,
I mean,
well,
Hal
I think
Finney.
non-zero. No, I think there's less than 1% chance that I think it's almost assuredly not Hal Finney. And I think the story of Bitcoin is better if Hal Finney is not Satoshi, because essentially what makes Hal so great within the Bitcoin story is that he was, the first champion of Satoshi, and that uniquely amongst kind of the old cryptographers. Um, yeah, you think about like how Satoshi was, greeted on the mailing list, like very hostily, right? And why was Satoshi's reception so hostile, right? Because everyone on the mailing list were like, these were the other suspects who potentially could have created Bitcoin, right? And they had spent all this time thinking about it. And so, their inclination was to just sort of shoot down his idea, right? So you got, 10 different reasons why it wouldn't work from a small group of 50, 60 people. Hal was sort of the first guy who said, I'm going to be this guy's champion. Even though I've spent my whole life looking for the solution, I have the humility and like the positive like human qualities to respect my peer and then champion them. And I think that I don't want to, I would be heartbroken if it was Hal, because I think like that's what really makes Hal so unique in the story is that you would have to think that he really did something that if Satoshi did something no one else did, Hal almost did something equally as irregular, which is he became the first person to agree and like, to become the champion of another person. I think that's like a really beautiful aspect of it. Man, can I give you Julian Assange? Yeah, non-zero chance.
Really?
Yeah.
And
yeah. Well, a lot of people don't know that Julian Assange has like a really hardcore history in cryptography. So that he not only is he involved in Bitcoin's early history, and I actually think it's high. It's amongst the more plausible theories. I think that it's someone in the WikiLeaks like sort of orbit. So Julian Assange, a lot of people don't know that he was a formerly trained cryptographer, and he actually did develop like extremely sophisticated cryptographic techniques. So one of the ones would be I used to cite this one all the time. What's it called? I can't remember what it's called, but essentially it's a cryptographic protocol that ensures that if you are given a secret key, you can never prove that it's the secret key. And so even if you were like under torture or forced to reveal some piece of information, if you ran it through this protocol, the person would never be able to prove that there wasn't another key. And so you'd never be able to incriminate yourself.
wow.
Fascinating to think that like Julian Assange created that, given like the what had happened to him. So yeah, I think someone from that orbit is pretty likely, right? He was sort of in like the super deep part of the dark web, that was like involved in sort of staunchly anti-government activities. But yeah, again, I think it's much more likely it's some, somebody you and I would never know. And, there's a lot of anonymous people on these mailing lists going back to like the 90s, who would put forward their own digital cash proposals. And there's actually some interesting correlations between like these anonymous identities and kind of future things. But, yeah, far more likely it's somebody like that. And I do think the big question is if someone's going to find it, I think the AI opens up a whole new frontier, like in the search. Or maybe there's a documentary, Can AI Find Satoshi, for the Altcoin Daily.
Another documentary. Yes, I would watch. Pete,
Yeah.
they say one of the biggest ways somebody could kill Bitcoin or severely hurt it is a self-inflicting wound by the developers. What is BIP 110? Core versus nuts.
Oh boy, you don't have enough time for that one.
For somebody who's
Yeah.
never heard of it.
Oh boy. Well, so that's like sort of like saying, so you've never heard of, okay, yeah. So in Bitcoin, any group of people can write a compatible software that runs Bitcoin, and claim that that's Bitcoin. And so, yeah, there's currently a schism amongst the Bitcoin. Well, I actually wouldn't really call it that. I think like the Bitcoin developers themselves are, excited about their version of that software, and they believe that they are putting out the best version of that software. There's a smaller group of people, some of whom have historical affiliations to, the group of people who are the main Bitcoin software developers, who don't believe that that's the right path for Bitcoin. And yeah, they are writing a piece of software that will have rules that are incompatible with that other software. And if enough people run that rule set and there isn't some sort of super majority of people who update to it, you will end up with sort of another situation where there's another competing, Bitcoin network and chain and coin, right? So like with Bitcoin and Bitcoin Cash. That's a hard one to condense.
No, I appreciate it. And to set the stage, this is around when I got into crypto. The hard fork wars, where it was Roger Ver and Bitcoin Cash, used to be the Michael Saylor of Bitcoin Jesus, started his own competing chain, or was championing it with Bitmain. Okay, these are very broad strokes.
I'm interested in hearing how you're saying. Yeah, I mean,
and that was huge turmoil back in like 2016, 2017, and we were seeing who would be the real Bitcoin, and people obviously chose the original real Bitcoin. There's fear that something like that could happen again, or is that overblown with BIP 110?
Yeah, I think it's wildly overblown. I mean, I think the only question right now is, does any sort of hash rate or user base split off onto this new, this new chain? Does anybody, and do they have enough actual backing to even form a new chain? So one of the interesting things about Bitcoin is it's a consensus system, same as every other cryptocurrency, right? And if you can at any time, like you can launch, Austin Coin today, and your Austin Coin could be a alternate version of Bitcoin with a few changes tweaked, and like no one could use it or care. So this is like possible at any point in time, right? And thousands and hundreds of thousands of people have done this, right? There are literally hundreds and hundreds of Bitcoin forks. Yeah, this one is only sort of interesting because there's sort of a cultural faction that has, certain complaints and certain ideas, and sort of one of the core ideas that they have is that Bitcoin is, quote, money, and that it must be money, and that somehow Bitcoin Core is making Bitcoin not money. And
is Bitcoin Core original or Bitcoin not? Which one's what we have right now? Core or nuts?
So Bitcoin Core is the sort of the majority software instance of Bitcoin. So when you use the term Bitcoin Core, you're referring to sort of the GitHub repository and the developers who contribute to that repository and the sort of software issuance that results from that process. So the new fork, which doesn't have a real name yet, but their proposal is BIP 110. Right, they're sort of proposing, and really what they want to do is they want to strip out certain parts of Bitcoin scripting language that they feel are being abused by people to kind of launch tokens and meme coins and NFT like things on Bitcoin. So they want to remove those because they want to essentially remove current functionality from Bitcoin. The way the rule set works within Bitcoin, right, is you can restrict the rules and then stay within consensus, right? If you think about this, if the speed limit is 120, and then all of a sudden you make the speed limit 110, there's no new network, right? Everybody's still under both 120 and 110. If you were to suddenly make the speed limit 130, and then there are some people who are going 130 miles an hour, and there are some people who are going 110, and the speed limit is still 120, they're sort of incompatible, right? They just end up in a fissure where you're in two different networks. And so yeah, that group sort of sees itself like in the lineage of one of the groups from the past kind of forking effort. And so there's a lot of kind of like tribalism and like pageantry that this is kind of like a return to Bitcoin's roots. sort of users like kind of rising up against the developers. There's a lot of like kind of COVID era like accusations that Bitcoin Core is some sort of like nebulous and like untrustworthy like liberal, university type group that like establishment, and so, and that like Bitcoin Core is going woke. Like there's a lot of that, right? So I think like there's a lot of people, unfortunately, who like really love Bitcoin. They like learned about Bitcoin a certain way. And a lot of their identity was based on like hating the crypto ecosystem, but like really thinking that like Bitcoin was better because it didn't look and operate like crypto. And I think they just generally are sort of like afraid and they don't like the idea that like you can do crypto things on Bitcoin when in reality, like most crypto things started on Bitcoin. There were like NFTs on Bitcoin in 2014 and like stable coins on Bitcoin in 2014 and 2015. And so they just have this whole worldview where like they were sort of told that Bitcoin was money. And then this idea that there were like a new group of people who were doing other things that weren't whatever they thought they wanted to happen with Bitcoin. And so now they're deciding to potentially fork off and like their own coin, which again, they have the freedom to do. Like nobody can stop them from doing that. I mean, I think from a historical perspective, it'll be really interesting because the techniques that they're using, I think like the only people who are interested in this probably would be people like myself. It's like they're using some really interesting techniques where like I'm curious whether they'll even be able to create like another coin. If they split off, it'll be really interesting, depending on how big the economy is, right? With Bitcoin Cash and Bitcoin, as you were talking about, I mean, this was like a big deal. Like exchanges had to decide whether they were going to support it. At least like 20 to 30% of the hash rate was supporting Bitcoin Cash at launch. And so there was also, and like this had never happened before. So there was all sorts of questions about like these exchanges suddenly found themselves, holding a bunch of people's money and like coins that they couldn't assign to people. And it was just like, it was a tremendous, like everyone was involved. Everyone had an opinion on it. As much as I think one small group sort of wants this kind of new fight to be that it doesn't seem to be kind of scaling to that level. Because some of their arguments, I don't find terribly interesting, right? I think that Bitcoin is money because people use it as money. But as other developers have shown, you can use it for other things. And because this is a permissionless free system, I mean, they have as much right to, I believe you have as much right to like write a piece of software that interacts with Bitcoin as you do to, hold your own keys. Like that should also be foundational. And so, right, if you start a multi-level marketing scheme for Altcoin Daily with Bitcoin, you have the freedom to do that. There's nothing that stops you from doing that. And so the people who've written interesting protocols that use Bitcoin a certain way, I think they should be free to get market adoption, based on those designs. And like with ordinals, right, we've seen that the market for these kind of things come and goes, right? When NFTs were hot, ordinals were really hot. When now NFTs are sort of, passe, so people don't use ordinals. And so the market sort of tends to sort this out. But yeah, a proper accounting of that history. It's really sort of one big developer in the history, Luke Dash Jr., who's sort of a very important cultural figure for Bitcoin, who's leading this movement, and that's kind of like one of the reasons that it's most significant, is it's sort of seen as like his big moments in the space, and he is someone who's deserving of that, right? He's contributed a lot to Bitcoin. I just think of that in this case, he doesn't have a lot of popular support. At least among developers, and in the broader community, it's been hard, I think, because, I mean, again, a lot of people have better things to do than hate cryptocurrencies that aren't Bitcoin.
Well, when I first heard about Knots versus Core, before I even knew the players involved, I was like, oh, to me, Knots seems like a no-brainer because Bitcoin is money. I don't need it to be anything else. But then as I did more research, I just thought maybe it's wrong to have an individual have so much power and we shouldn't set the precedent. And the first block or whatever, somebody wrote on the Bitcoin block, Chancellor on the brink. So it's always been, you can always.
Well, the problem with Bitcoin as money is like Bitcoin is also code. So like, I mean, just as a matter of fact, if I were to give you like the first obvious example, Bitcoin is two things. And the only reason that it's a novel money is that it's made out of code. So like those are inextricable things, right? It's like fiat money is made out of paper. That's what makes it fiat money. And so, yes, it is true that something can be money, but then that money is usually tied to some sort of medium. In this case, the medium of Bitcoin is software and code, and that's entirely what makes it new, right? And so it takes on properties like of those systems by that nature, right? And so a lot of those properties are really great. billions of people can use it around the globe. It moves at the speed of light. You can look at the entire transaction history and audit it. But it's also code. You can rearrange those numbers and zeros into anything you want. You can create whole compatible systems, like Casey Rodarmor did with ordinals, where he just numbered the bitcoins like an order, and he just like made up a random system to do that. And it's like, what is that? It doesn't have anything to do with Bitcoin, but it refers to Bitcoin, so it exists, right? It's a logical extension of the system. And so, this is sort of what I think is a problem with that movement, is they sort of want. I think this is very similar to the Bitcoin Cash folks, right? The Bitcoin Cash folks sort of wanted Bitcoin to be like a payment mechanism. They really wanted Bitcoin to sort of the economy of Bitcoin to scale through like peer-to-peer payments. And they got sort of fixated on this like definition of what Bitcoin is, and then they sort of tried to make the technology fit the definition. When in reality, Bitcoin is a technology. It is true that it's definitionally as money only insofar as me and you and everyone else uses it as money, right? Which people are. And so, yeah, it's not. To me, it's not super interesting to kind of get rid of those qualities, right? So I don't think that getting rid of certain elements of Bitcoin scripting language is interesting because it exists. I have the right to use those things. Other people could program these. I mean, some of the things that they want to get rid of are like, statements that like, because again, all these cryptocurrencies, they all have, programming languages, and they all have different things you can do with them. People just sort of setting like certain types of like time lock security constructions like would be impacted. And then those people say, oh, well, you don't need to use those things. But, um, again, it's Bitcoin, and you have the right to do whatever you want with it. And this is how Bitcoin is, right? So Bitcoin also has the qualities of like, okay, if you don't want anyone to be in charge of what Bitcoin is, then you have to accept it as it is. And, in the same way that you can fold a piece of, a dollar bill into a paper airplane and throw it, it's still a dollar bill and it's a paper airplane. Like, there's qualities of the Bitcoin that are a code, right? That's just a property of it. I just don't see how you're going to get rid of that. And if you're fighting that battle, if your goal is to sort of like really minimize Bitcoin, yeah, I mean, look, I think that the developers of Bitcoin have wanted to make Bitcoin scale and for Bitcoin to do sort of lots of complex things. Like we assume that if Bitcoin demand goes up, blocks will be full. They'll be many layers on Bitcoin. They'll be sort of, Bitcoin will be a really complex engineered, sort of system. And we assume that people will be doing stuff like they're doing in the crypto world with Bitcoin, like, lending in permissionless ways and accessing liquidity pools to do, things that they want. And yeah, I don't think it should be up to some majority of people to decide that like some minority of people can't do something. In fact, that's the kind of precise reason that I sort of got turned off to like the cryptocurrency world with like Ethereum and those kind of things. Like I think on most other cryptocurrency systems, if you don't go along with what most people want, you are no longer part of those systems. And one of the things that makes Bitcoin really interesting is that you have ways of not going along with what the majority of people want within Bitcoin, but you're still within the Bitcoin consensus. Whereas within like Ethereum and Solana and some of these other derivatives, you don't have that level of assurance. I think there's a question of like how much that matters to you as the end buyer. But I think that's probably like if you were to stack all of the cryptocurrencies against each other. And when I have these long arguments with this like Ethereum founder guy, this is sort of one of the bedrock ones, right? Like if Bitcoin has the assurance that like no majority of group of people, like no plural group of people can get together and like revoke something that you did. And then in other cryptocurrencies, that's the case, then Bitcoin is just automatically like a little bit stronger than everything else. So whether you admit that everything else has a point or a purpose, whatever, all you have to do is admit that the guarantee is like a little bit stronger, right? And so how much of that is, I thought one of the strongest kind of arguments of the fork war era was sort of, well, a system where a majority of group of people can decide to do something with your money sort of starts sounding a lot like the fiat system where, people elect some politician and then that politician prints some money and now your money is worth less because some majority of people like thought that it was a good idea to spend this money on a war with Iran, right? So like that system starts to look like other systems of money that we have and one aspect of the sort of fiat money system. And you can probably quibble with this, but I mean, there is some relationship between, modern democratic governance and the fiat system, right? Because most of the big fiat currencies are operated by democratic governments, right? So, if President Trump like inflates the dollar supply and you voted for Trump, the logic sort of goes, well, you consented to that. You through the democratic system consented to that. And then the person who didn't consent to that, well, it's like you still, doesn't you're still affected by it anyway, right? And one of the interesting things with Bitcoin during the fork wars is like I think we found out this like interesting thing about Bitcoin, which is like potentially we could create it, make it so secure that like if some mob of people decided that they didn't like what you were doing, they couldn't take your Bitcoin away. And that's what this like group of the BIP 110 people sort of look like to me. They however well intentioned they are and however like smart their rhetoric is, they really start to look like a group of people who like want to get together and say like, okay, well, if most of us agree that like you shouldn't be doing that, then you can't do that. And I don't know. I think Bitcoin should be a maximally free system for you to build and develop on. And I think if that sort of goes away, if you see that kind of side of the aisle prosper, I think you end up with a Bitcoin that looks very similar to a lot of other cryptocurrencies.
You're saying if you want to keep Bitcoin as decentralized, permissionless as possible, keep core, don't change a thing, but really it'll be much ado about nothing. They're not going to get the support.
Well, or make your own, right? Like you can also make your own thing that's compatible, right? That's kind of the cool thing. But yeah, I would say you should reject the BIP 110 fork, and I imagine the market will reject that fork. I think it'll be fascinating to see if it even survives, right? Like because you have to do a lot of mechanically. I don't know if you were around when Bitcoin Cash came in, but there was like a whole day where like nobody knew if there would be a Bitcoin Cash because like what happens when you fork is like it's as hard to mine the next block as the previous block. And so you go from like, I mean, think about it like, how many millions and billions of computers are mining Bitcoin. And then you go to a new chain where there's like, I don't know, a few big axes and like a garage. Like you have to like mine like that much to get over the next block. And so there was like a whole day where like these miners were just like burning data centers like to try to produce this like one new block. And they did that, they ended up doing it. But then people were like calculating, like, here's the math. Like, okay, here's how much money you wasted like trying to create this block. And so, yeah, it'll be interesting to see if it just. I think it should exist. So here's the deal. I think the BIP 110 people should exist. I think that I know they don't want to be their own chain, but I think that they should succeed in being their own chain. That would be good.
But make it a Bitcoin Cash. Make it a different coin.
Well, you keep sort of saying different, and like the interesting
like Bitcoin Cash.
Well, so there is really no way to sort of. This sort of gets into like the very complex theory of Bitcoin, but like there really isn't a way for you to tell what makes Bitcoin so what defines Bitcoin, and the answer is you do.
The history of the chain, though, the history of the biggest chain.
Yes. Well, but yeah, I mean, this is sort of like, so the original logic that Satoshi presented was like sort of the longest chain or the most chain of work. And so the question then sort of, so the chain with the most work applied it. So the question then during the fork wars was sort of, is that sort of a competition? Like when you introduce two different versions of the software, do they compete for that? And if they did compete for that, so like at the time, like one of the things people thought would happen, right, is that they thought, and again, if you're an exchange, like the exchanges were like horrified about this because like, okay, imagine you had like two versions of Bitcoin that were like somewhat equally run by miners. Let's just say you had a 50-50 split and like both of those chains were mining. Well, then like sometimes one would be longer than the other. Okay, so then that ticker would be Bitcoin. And then like what, the other one goes in a bit and then that takes the Bitcoin ticker.
For a bit, but then eventually one would win.
But you see what I mean, where like the system sort of breaks down. Because if you're in a system where like you're an exchange and you have to list an asset, and then the asset just like totally like change the actual nature of the asset like completely changes, right? So like think about it, like okay, chain one is like in the lead, and you go on Coinbase or whatever, and you buy or Kraken whatever, you buy that coin, and then like chain two takes the lead, and so like your Bitcoin is no longer called Bitcoin, it's called the other thing. And then the other one comes in the lead. And so like what do you okay, like so do you like rename the thing in the exchange? But like, okay, well what you know what I mean? Like the nomenclature really starts to break down. Mm-hmm. This is where like the theory starts to break down because really like the only thing determining whether Bitcoin is most people agreeing that that's Bitcoin.
And I would say though that like that's how decentralized Bitcoin is, because the miners choose the chain, but Bitcoin is decentralized for the node runners, the miners, the exchanges. So really you got to get 51% of all these totally separate entities to buy in, and then that's how that would happen.
Well, like sort of like so. One of the this is like you're now in like sort of the. I mean, it's one of my favorite parts, but you're in like the dark forest of like random edge cases here. But like really, it's like the economic majority. Like so, let's just say like okay, like for example, let's just say like strategy was on its own chain. Like just for and again, this happens in crypto, right? Like you see like a coin will just move to its own chain for so like a popular DApp will move to its own chain, right? And so like does that like you would have the economic power, you maybe a greater economic power than the other one. It sort of said like there isn't really so how we know that the Bitcoin is that there's a canonical link in like the actual software itself where theoretically like with Bitcoin Core you could go back to like version like 0.3 or whatever and you could still run that version and you're still on Bitcoin. So it's sort of like the most canonical software links for the most period of time. But like this, I've been very unsatisfied. I really looked for an answer to this for like a really long time. Like I thought if I like dug deep enough and asked enough questions, there would be an answer here. And then I sort of had to come to like sort of the and this is like when you get deep into the Bitcoin, I call like, when you're deep down in the ocean, there's just some strange looking whales down there. There's just some strange stuff. And like, I don't know, I don't know what to do with it. I don't know if I'm better off knowing that it's there, but it exists, right? And so, yeah, like theoretically, like if you decide that something is Bitcoin, then to you, it's Bitcoin, right? Like to the Bitcoin Cash people, it's Bitcoin. The question then is, do the majority of people like agree to your, subjective value? And so like really, Bitcoin is really just what most people think Bitcoin is really at the end of the day. And that's an uncomfortable thing because it's not absolute. And so people don't like it and they don't like to talk about it. This is why I think like Michael Saylor like never talked about software development in Bitcoin. Because like once you get
What?
on like so far, it's just like, if you're like Bitcoin's like a mutable property and it's blah 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 and you're 100 years and then you're like well like really like actually like we don't actually know what makes Bitcoin but it's there's other how I came to like a piece with this was that that's true. Like we don't know the meaning of life, right? Like you don't know that, but we're both here, right? Like, and so there are like doing science and things of science requires that you're going to hit some edge case at some point where you're like, oh, can you explain the nature of time? And it's like, I don't know, I guess. I used to say at CoinDesk, I had the saying where I was like, you could also put at the end of every news article, like, well, the sun's going to blow up someday. And so, like, you don't have to care about this, right? That's true. It's like factually true that the sun will die and, like, you will not probably have to care about this piece of news. But it's so irrelevant to, like, whatever you're talking about that, like, that piece of information has no bearing on it. And so, yeah, like, once you're deep in, like, sort of the Bitcoin, thought stuff, yeah, there's just some interesting stuff down there where it gets confusing, right? And so that's where, to me, like Bitcoin really starts to just look like a very unique kind of thing that just formed over time and just has certain characteristics. And so when people are really like, blatant about like changing those characteristics, I've always tried to like understand what's happening, right? Take an empirical, like what is Bitcoin? Like what is it doing? Almost if it's like a strange phenomenon, right? You have to sort of appreciate it for what it is. And Bitcoin has some very strange properties. Does that mean it shouldn't have those properties? Like, well, it does. And so I think that's what that group sort of why they sort of rub me the wrong way, and I can be a little bit antagonistic to them. But yeah, they have this idea that like they sort of know what's best, right? That they know how Bitcoin should be, and I'm like, well, it is this way. So like, how do you know? Like, what are you basing that on? Because the Bitcoin that you're currently using as money already does this. And you keep saying that it's the best money in the world, but you're mad about this for some reason. So I don't know. I have a lot of trouble with that. Their argumentation doesn't really like if I would accept that Bitcoin was failing as money if I couldn't use it as money. If there was some way for me to like like quantify that. Like, is there like, and I asked a lot of people in that movement, I was like, okay, well, is there something that you can't do right now that like you want to do? Like, what's the thing And really the thing is they want to be able to exclude other transactions from the Bitcoin, like reaching finality on, on Bitcoin. Yeah, that just seems like a problem. Like, that's not like a useful thing for you to be doing as part of the network. And it starts to resemble something that actually looks like an attack on the network, like if enough people do it.
Pete Rizzo, you are the Bitcoin historian. I love your perspective. You have a huge following on X, but you just started your YouTube page. And I'm actually going to your YouTube page right now, and you have 188 subscribers.
Yeah.
When you have millions on X, less than 200 on YouTube. So I want to encourage my audience. Let's smash by Pete Rizzo, Bitcoin historian on YouTube. Let's get it over 500. Can the Altcoin Daily audience do that? Thank you, Pete.
Appreciate it, sir.